But investing in the stock market has historically been one of the most important pathways to financial success. As you dive into research in stocks, you will often hear them discussed with reference to different categories of stocks and different classifications. Now, having this knowledge will help you in deciding what to do at every point in time. So we will be looking at the classification of stocks. We have the large cap stocks, we have the mid cap stocks, and then the small cap stocks. That's not all, but we'll start with that. And Mr. Charles, I'd like you to talk to us about what these mean.
Stock classification, or large cap, small cap, or mid cap? Which one?
No, you're talking. You are going to take us on large, mid, and small cap.
Okay, yes, these are good classification. But the essence of this classification is for investors to understand what's looking at their budget, what stock should be in their portfolio, you know. But when you say large cap stock, international standard, talking of over 10 billion, $10 billion. That's large cap, you know. Then when you talk of mid cap, between $2 billion and 10 billion, then anything below $2 billion, that is small cap. Now coming to Nigeria here.
Exactly.
If we use that as the yardstick, so many of the companies we think are mid cap will go under small cap, you know. But thank God, some few companies have met that standard, that large cap. We have the likes of Airtel Africa, you know, with a market capitalization of over 6 trillion. If you convert that, you see that's about 4-point-something trillion. So we can commonly say that Airtel Africa is one of the large cap companies in the Nigeria market. But let me even explain what is market capitalization. This can fluctuate on a daily basis based on, one, the price, the current price of that security, and of course the outstanding shares. Ambrose made mention of Keregu having 2.5 billion. That's the outstanding shares for now, while Transcorp has 40 billion. So at times, being large cap, mid cap does not transform to performance. Yeah, that is what we need to understand. Yes. Does not transform to performance. So when you multiply the current market price, or let's use the closing price for today with the outstanding shares, that gives you the market capitalization of that particular company. Now that is large cap. For Nigeria, we have said Airtel, MTN, Dangote Cement, they meet the large cap companies. However, for mid cap, you might have the likes of GTCO, Flour Mills, you know. Like I said, depending on their current market price and their outstanding share. If they issue more shares, of course, their market cap will go up. Then for small cap, we have likes like the Transnationwide, maybe Fitsin.
Okay, so we would like to know what's the implication for an investor when you're making a decision.
Yes, for an investor, you look at, for large cap now, let's take Airtel for example now. Airtel is almost about 1,800 naira. Yeah. And for an investor, what's your budget do you want to invest? What will that give you? But again, I want to even use a practical example.
Okay.
What happens on the floor of the exchange when you are trading? This large cap, mid cap, and small cap, the way we differentiate them is, Ambrose made mention of it today, we're talking of volume that will increase the price or decrease the price. For tick, we call it tick. For small cap, it is 1 kobo. And it's range between stock from 20 kobo to 499 kobo. If I want to increase it or decrease it, I will just need 1 kobo. It's only 1 kobo tick. But of course, I will still need the same 100,000 units. Now for mid cap, between 499 kobo and of course 99 naira, 99 kobo. The tick to increase it is 5 kobo. That is, if a stock is 10 naira and I want to increase the price, I have the volume, 100,000 volume, I want to increase the price. I can only increase it 10 naira, 15 naira, sorry, 5 kobo. 10 naira, 50 kobo, 10 naira, 5 kobo, 10 naira, 10 kobo, 10 naira, 15 kobo. That is how I can increase it. While for the large cap, this is between over 100 naira price. So we call those ones large cap. It's our own standard, our own classification. But the international classification, we have seen over 10 billion. That one, what you need is 10 kobo to increase the tick.
All right.
Of course, you still need the same 100,000 volume. So these are classification, so that when you, as an investor, you see you have invested in Nestle and you are seeing that for a very long time, the price has been the same because there has been no volume to increase.
There's no volume to
yes.
increase.
So for you to increase the price of that securities, you need that volume, and it's not going to increase by 1 kobo.
Yes.
Or 5 kobo. It will increase by only 10 kobo. So if you see a stock, let's say Transcorp, that is less than 5 naira and it is going up by just 1 kobo, you should not quarrel with your broker. You should understand some of this basic terminology when brokers use it, and of course investment analysts, when they use it, you understand and flow with them. But these are just basic terminologies which everybody can understand.
Okay, but very quickly, I also like you to talk about growth stock, value stock, dividend and non-dividend stock.
Okay, I won't start where Mr. Charles started because he has given us the background
yes,
of
he did.
Yeah, what I will not start with when you say a growth stock, this stock, people they are not good in dividend payment. Most times they don't pay dividend because they are growth stocks. They are planning for the future and expanding the business so they can pay you good dividend in the future. But as now, they might go say, let's invest more to expand our business. And another thing that in an environment where there is interest rate high, as we now, growth stock suffered a lot because they want to expand, they are borrowing money, and when the interest rate, it will not kind of choke or slow down their business. That's why in an environment where there is high interest, like when I see most companies that are growth stock, their payment in terms of dividend, you look away from them. But when you talk of value stock can be also be classified as either blue chip stock and all those stuff because they say value because that means they've been in the market and their earnings have been consistent, they have good fundamentals, that's why they are called value stock. And this is where you can also hedge against inflation when you can also see value in that company. And this, for example, now let me start from the growth stock. Growth stock, I said like assets has that quality of growth stock, value, and at the same time, also I would say defensive stock if I use that language, or a blue chip company for asset. Why I say so? Assets bank continue to expand and they're going to board. If you look at their dividend payout, it's very, very small. You know why they pay that? Because they are spending most of their money for expansion. That's why I said also if you look at the earnings that are coming from Access Bank, you show that it's a value company because in the industry where it operates now, despite that it's still good stock, we had that characteristic. It's still also as the leader in that because if you look at the gross earnings in the banking sector as to speak now, despite the dividend payout is still low, it's leading than gross earnings. That is the answer. If you look at the bottom line, it's small because of what the expansion they are doing. That is for one. But if you look at also the value stock, consider the life of let's say for example now let's take the GTB as the value stock before. Now you know that the stock is coming down. That's the most consistent stock before in terms of where you can see good profit margin. Well managed company for that you can say it's a value stock. But even when the price is dropping now, it becomes more attractive for those. I tell you that what you are seeing the price of GT Bank today is beyond market correction. It's just fear. It's part of what is pushing there. And also those that are foreign investors that are selling down because they don't know where the company is going at this point is all part of it. But I believe that we Nigerians understand the business and also where they're operating because I tell you anywhere in the world, banking sector is an engine room of economic growth or economic activities. As far there is economy, such bank also bounce back. That's why people are taking advantage of the low price to position in it. These are one of the value stock I would say because dividends have been consistent for years and also we have seen that they are very good. Also you can look at other sectors like life of Dangote cement. You can look at Nestle. These are old names and good names because these are value company we can say because they are consistent. The next one there is dividend dividend stocks. Yeah, dividend stocks for me, it's easy for you to know. These are consistently paying. For me, I say there's a language we use for them. They have a dividend equalization policy. That means they pay you dividend consistently. As far as they're making money, they pay dividend. And that is to say that those companies are still value companies because they consent to work to pay dividend. And that is why look at the banking sector. When a bank is not paying dividend, you already know that bank people tell that bank is not too strong because it's part of assessing a bank fundamental that you must pay dividend. That's why companies that pay dividend consistently is what we refer to dividend paying stock. But for those that are not paying dividend, it's a result of one. Either they are not performing because you can't give what you don't have. Yeah. If you are not performing, it's understandable. Also, like those that are also in classification of growth stock. A growth stock and not to pay dividend, expanding, and if you're making capital acquisition, really good money because if they are performing and the numbers are good, people are paying, dividend might not be coming, but you are making good capital acquisition. But in this environment where there is high interest rate, it's those growth stock that suffered most. That's why this period now, because you can see that most companies. That's why I tell people that yes, I'm looking forward to see third quarter number.
Earnings.
Let's also know that because of this high interest rate, dividend payout for the year 2022 might not be as good as what we saw in the previous years, unless the company that has that dividend equalization policy that it must be years ahead. But those that are good stock that are even trying to pay little before, because of this high interest rate, the market was also said that that's why if you are even making choice stock to invest now, you have to be very careful. You have to look at the numbers you are seeing and see, does it support their previous payment, or if they start to pay less, can it still make value? Because most of the stock are pulled back to make their earnings very attractive or dividend attractive. You need to also look at that when you are taking your decision.
All right. I was going to ask you a question, but I guess you've already answered it. Okay. I wanted to say, looking at the prevailing macroeconomic indicators, what should we go for? But I think you were talking about value stocks.
Yeah. No, for now, the NPR, we have seen interest rate, we have seen all, but there are companies that can successfully pass their cost to consumer and they still produce a good numbers. Also, they might reduce their quantity of production, but because the price has gone up, you still make good money to support their price. That is the strategy that I say you are an investor most. But also, there's a level inflation can go that even what you are selling must remain at the shelf. That's why you have to be very careful. Look at those companies that has what inelastic demand product that no matter how costs increase, they still buy because of what. Like I tell you that no matter how food price will go today, because the price is up, let's everybody in the house let's go and find bet. Because they say but we still buy food.
We still buy the food.
Exactly.
Okay, so Mukhtar, I'd like you to talk to us about income stocks, cyclical stocks, and non-cyclical stocks. If you can hear me, Mukhtar, do go ahead, please.
Yeah, income stocks is almost the same thing like he has said when it comes to dividend paying stocks.
Exactly.
Those are stocks over times that have been pay you good dividend. And we're talking about, like he said, we're talking about stocks like GTB, like he said, GTCO now. You look at Zenith Bank, right from inception to date, they've been consistent in their dividend payout. And income stock could also be stocks, companies that raise their stock. Sometimes they start with paying you the next quarter, the next year, they are improving on that payment also as the time goes on. And some of them also could be income stock because they pay you good, but they give bonuses. These days, bonuses is becoming a thing of the past, like they said there, because of
share capital.
type of share capital that we have, and they need all the money. So, income stock are what I call passive income stocks, passive income stocks that like he said, come what may, that GTP, no matter what is happening, they will still pay their normal 3 naira at the end of the year, 30 kobo now, 2 naira 70 kobo, because the liquidity is still high. Yeah. They are very liquid, they've not done so much expansion, so they have high liquidity, not like others, like he talked about Access Bank, BMU Pro, because of their expansion drive, they don't pay so much, they pour in the money to expand. And that was Zenith Bank, the reason, because the reason why Zenith pays that was because the largest shareholder is the owner of the bank, so it needs the liquidity also to expand.
Exactly.
So, those are good income stocks. You also look at Dangote too, and then you don't forget one very big income stock is Guinness. It pays virtually all his profits. I mean, this year it paid 7 naira 14 kobo. It's total profit, total 100% to investors. So that's a very good income stock also. Nigerian Brewery used to be an income stock.
Let me come in here. When you talk about Guinness, is it enough, generally speaking, is it enough to just look at the dividend payout? Isn't it important to also look at some other indices, for example, the dividend yield? We need to know the profit to price to PE ratio. We need to know some other things to decide if actually what we are getting is good in terms of percentage.
Today, the PE ratios are very low. I'm telling you, I think the research expert there can tell you basically, I don't have them on my head, but I know the PE ratios, especially for the banking stock, it's not even up to 3 as it stands. Yeah. And the PE ratio, the lower the PE ratio, the cheaper the stock, the higher the PE ratio, the more expensive the shares. So for now, we have good PE ratio, not only in the banking stock, but really all the companies, because their PE ratio is very, very low. But like investors, I almost tell people that I'm not so much concerned about your PE ratios also. though it works also, but I like to look at your earning per share because that will determine how much will come to my pocket, not your PE ratio. So definitely as investors, you should look at what is coming to your pocket. You look at the earning per share, and then you say, okay, are they, you know them that they will pay 30% or 20%. Like I just talked about Guinness. Guinness paid all their earning per share of 7 naira 14 kobo. So, and when you see a company paying almost 60 to 70% of its earning per share, that tells you that that company is highly liquid. And so when you have a highly liquid company, even the other 30%, they are keeping it there because they know there will come a time maybe they will not be able to meet. So they drop into their reserve and give you. We could see that play out with Access Bank, even despite their expansion drive. Now, Access Bank normally a company that pays 30 kobo. But this time, for the first time, they are paying 20 kobo. And then when you look at the numbers are very good. But again, they rather pay 20 kobo. I'm sure they would have said, okay, let's not pay, let's wait till the end of the year. But that will affect the value of the equity. So they say, okay, let's pay 20 kobo and see how we can manage it. UBA did that, I think, 2 years ago when they came out and they paid 20 kobo, and then at the end of the year, they paid 45 kobo. So investors were not happy, people were not, but the price went down. But today they are back to last year, they paid their normal 20 kobo and 80 kobo. So definitely, earning per shares are good, but I tell people, I mean, PA ratios are good, but I tell people, look for the earning per share. That's what brings value into your pocket as an investor. And PA ratio help in terms of price appreciation. So if you're an investor that are looking for price appreciation, then you look at the PA ratio. But if you're an income-driven investor, if you're an investor that are looking for price appreciation, you look at the PA ratio. If you are income-driven investors, you look out for the earning per share. That determines what will come into your pocket.
Okay, so let's move on to the cyclical and non-cyclical stocks.
I can't get you. I didn't hear you.
Okay, I said let's move on to the cyclical and non-cyclical stocks.
Well, cyclical or life cycle stocks. Sometimes I said talking about a stock liquid or not very liquid stocks, and I think that's what Mr. Charles, the stockbroker, was trying to talk about. Some stocks that they don't have value, they don't move in volume because of those. They don't have so much liquidity there, and sometimes they don't have the liquidity, or sometimes they don't have the volume. You could see the price going up, but you want to buy, you are not able to get them to buy. So I always tell investors, especially, you look for highly liquid stock. And you could see that play, especially in the insurance space. You realize that some of them are just in one position for a very long time. They are not going for that and that. So for me, liquidity is key in the market, especially in an economy like ours. It's driven by liquidity. So Nigerian investors used to pride themselves to buy only stocks that pay dividend, and I think that that cycle has not changed yet, because of the kind of economy that we are operating, where liquidity become key. And when I talk about liquidity, you talk about cash. So you want to, and again, once you are investing for specific projects, it's good to be in a highly liquid stock than in a non-liquid stock, because you might just be investing and you need the money. So you don't want to wait for 1 month, 2 months, you're not able to sell your stock, and you begin to blame your broker for not doing what they ought to do. But definitely the fault is not theirs. The company is not making any, there's no so much to, and people are not ready to buy, because even the price that you're, so I don't want to call them, there are some stocks that are there, you see their price so high, and yet volume is very low. The day you see volume high, you see them go, then the next time you want to sell, even at that, you're not able to sell. So most times you see, I think the broker will help me just do cross dealing. Oh, you have this stock you want to share. I have a customer that, so let me just cross it over. So I think for me, basically, you should always look at depending on which side you are. But I don't think any investor want to be in the side of a non-liquid stock, because you really need your money at a particular time. And even if you are going to leave it as an inheritance to your children, you want to leave something that your children should be proud of, not something that they are struggling to sell. So definitely, I am highly the person that think of liquidity is king. To me, what in companies they will call cash flow to an individual, liquidity is key, because company cash flow help them expand, cash flow help them meet their demand. For individual, liquidity, cash that comes to your hand, help you expand in your investment drive, and then also help you in Nigeria. Some people invest that at a particular time. I need to pay student school fees. I need to pay my house rent. Some investors time it, and so that's why some stocks like GTCO, Zenith, Access, UBA. You see the volume drive because some investors, those are the stocks that they use to take care of themselves. I'm one of those people that always think, look, I need those stocks at a particular time to drive a particular goal at a particular time. So definitely, I advise investors to always go for liquid stock. For me, those are the best. That will make the market interesting. And the most liquid sector in the Nigerian stock exchange is the banking sector.
Okay, thank you so much. Well, very quickly, we'll be looking at growth stocks, value stocks, and I think, we'll just do that. The safe stocks, the blue chip stocks, and the penny stocks. I think I'd like Ambrose to talk about that.
Yeah, just to add to what my colleague just said about cyclical stock, it moves with the trend of the economy. Yeah. When the economy is doing well, some stock will do well. When they're doing bad, especially look at what's happening in the oil sector, because we're seeing oil price at the consistency. There's a time oil price stock was to come down. That is why that sector is almost example of a cyclical stock that there's a time that's up, down, and also we reflect what's happening in the economy. For investors, like you just said, look for those kind of stock at the time that is booming, take advantage of it, then know how to also exit. Don't actually say people that say we invest for long term. It's good to have a long term portfolio, have a short term portfolio, but know that your eyes is on your. That's why I said at the beginning that knowledge, and that is why I agree with him that for you to make money in the equity market, you must up your game in terms of knowledge, your skill, because no matter the mistake you made, you have a good skill, you can always correct your mistake and also come back, in good. That's why knowledge is very, very key. As you just mentioned, the safe stock can be also referred to as, for me, defensive stock, because why is safe? Because one, either the price is gross on the price, and for that there's also what we call a margin of safety. When you see that the book value and the market price is their part, they can say you are buying at a discount. You say your margin of safety is high. That's why I said those stocks are for low cost safe, and also as a defensive stock as well. Also at the same time, but penny stock are those stocks that are selling below 5 naira. I will tell you. But in Nigeria here we have what we call a kobo stock already in the store that are selling below 1 naira. And this kobo stock, as also he said, this is a stock that the liquidity there is very, very small, and for that you can enter such stock, you'll be tied and they will track that kind of stock. At the same time, so I don't see institutional investors playing all those penny stock. They look for those blue chip stock, those high cap stock, those medium cap stock. They can't see it because anywhere in the world you see an institutional investor bringing money to low cap stock, they will be the one that put that price up. They want to sell, they want to bring it down. Also, when you want to sell, nobody's pleased. You are the one bring the price up, bringing that. For that, they avoid those penny stock. Also, there's opportunity penny stock that you can make good money for retail investor. Also, the risk is high when you are investing in penny stock. So that have it at the back of your mind. But those that are technicians like us, you can make use of it up and down, but you have to be very careful because most time dividends are not consistent in that penny stock. Also, most of them are struggling. Like we said, non-paying dividend stock are more of those penny stock and those kobo stock, as to speak. But for another one, there is a dividend yield. Can I see? Okay, dividend yield.
Yes,
dividend yield is just for me, it's a past result you are seeing for dividend yield because it's what they paid the previous year. Dividend is just to guide you. Know what is likely to come at the end of the day because the price at its cost tell it and what they pay people. Or if the price go lower or the earnings go higher, they pay higher. Just for it to be guided, that's why you have that dividend. For example, now I was saying that the GTB dividend now because the price is at 17 naira, it's almost 17% again. For people at the price of 17 naira, if you are buying GTB, if the price move from 17 naira alone back to 20 naira or 21 naira, they have made almost 14% or 15%. Okay. But that dividend, if they maintain that at 2 naira 70 at the end of the day, because they already pay 30 kobo for interim, your dividend is high. For that, that's why people want to put that because we know that the company, the bank is strong and there's liquidity there. This is dividend for me is just to tell you, guide you what to do. It is what the company has done, like he just said, the earning per share that will give an insight. Also, for you to be really a bit on the safer side, check the company payout for the last 5 years. Is it at try that pay 15% of their earnings as out? Like you just said, some companies like Nestle pay almost 95 to 98% of their earnings as dividend. Because if you look at that, the holding structure also permitted because the foreign investors are the one that has more. So they want to think, but what they are doing next is that they are not even taking the dividend out because of our FS problem. What they do now, you can see that for the past 2 years, we are accumulating the stock, increasing their stake because of that dividend instead of taking it back. These are the things that you want to look at. Which company will pay you nearly all his earnings, but also it has also bad effect that when the company is paying all his earnings as a dividend, at the day that the chips is down, well, because you need to have your reserve. But it depends on that's why they need to balance it. But I believe that those that has 50% payout of their earnings out 40%, 60%, 70%, you can reason. But those that pay 90, 95, 98 is the risky side. And like as you just said, stock like Guinness, as you just mentioned, pay now, he only had any pressure of 7 naira 15 kobo, and he paid 7 naira 14 kobo out. I mean, you don't have just is it up to people that was left in the deposit just because it says that also part that I have confidence in the company. Right. But for me, you need to also balance it as investor, but not to eat once and the next day become hungry. Because if I'm paying everything out today, I don't have what to pay when I didn't make profit. That's why
they need to have some
when they are struggling.
Yes. Okay. I think we have to end the
during the COVID-19 when they are struggling because everywhere was locked down, no sales. Consider that their earnings was bad and what they paid was also down. That the price went as low as almost this 6 naira 14 naira for Guinness before bouncing back. It just tells that this thing is very, very important to balance it as an investor, or even also as management, so that at the end of the day.
We need to go now. Yeah. Thank you so much.
Thank you.
All right, thank you so much for coming on the show, Mr. Charles Fakroha. Thank you.
Yes,
and of
you
course,
mentioned EGS stocks.
We need to go. Mr. Mukhtar, thank you so much for joining us on the show today.
Okay.
Mr. Mukhtar, if you can hear me, thank you for joining us today.
Yes. Thank you for having me for the first time. And thank you to my colleagues in the studio.
Yeah, welcome.
Investors are wearing different categories of stocks now. Yeah. So that would make them to take
it. Thank you so much. We need to end it now. Many thanks for watching. My name is Perpetua Fasami Peter. Do enjoy the rest of the day. Bye for now.
Thank you.